You guys know what time it is. It is Thursday at 2 p.m. Eastern time. You said it. It's 11 a.m. over there on the West Coast.
That's right. Where it's still sunny and great weather. We don't have any snow here on the left coast here.
And we do record this and we drop the episode on a mic drop on Sundays on YouTube. It's in the Google podcast. We'll be coming to other podcasts. So it's really growing. And we do have the live show, though. Some people like to watch the product being made. And today is a holiday edition. So we have a couple guests from throughout the industry who on LinkedIn had a very special story. One that I reached out to them and said, hey, can you just, it'd be nice to tell. And if anybody in the audience, and we'll keep saying this throughout the show, has a cool story that really warms the hearts of others, that's what today's holiday edition is all about. And before we get into it, though, Michael, how are the markets looking?
Well, it depends on your point of view, right? So if you want lower interest rates, I mean, the rally that we've seen for the last week and a half has been pretty exciting for mortgage originators. And as we digest on what exactly the Federal Reserve may or may not do next year, right? There are predictions of 2 rate cuts. I've seen them as high as 8 rate cuts. I mean, we really don't know what they're exactly going to do, but in either case, there are rallies in the bond market. So we see lower rates ahead, and that's the real key. I think one of the things that is now being digested, and I think Ryan Hillis talked about it in the real estate mortgage resource page on his YouTube channel. He says we're looking at layoffs across the board in the tech sector and retail sector and all kinds of sectors. So those layoffs typically also lead to unemployment, which also leads to lower rates. Unfortunately, for those who will be unemployed in other sectors other than the real estate and mortgage sector, right? So it's positive as far as originators are concerned, but of course, unfortunately, to the dismay of the rest of America, we have yet to digest what exactly is going to happen with that.
And then, do you think that makes people move? I mean, from what I see and what I heard, if rates drop, people don't list their houses typically in January and February. Mm-hmm. Are you seeing any housing? I mean, any housing starts that really says it's going to offset maybe one of the more unhealthy Marches in recent history? I mean, it keeps getting worse, but there'll be very little inventory. Everybody will be waiting for that home to come onto the market, and then they will all be trying to, whether it's outbid each other, tell a better story, right?
If you're watching certain social media people, either on Instagram or TikTok or whatever, I don't follow too many of them, but the ones that I do follow seem to have a very consistent tone that between December of the present time up until February is going to be like the perfect time to buy a house, meaning that they expect interest rates to go down, the buying power for the buyer will increase, and those who are on the sidelines who actually have savings or if they decide to wait, will end up just with higher price. They may have lower rates, but the real calculation is how much higher are they willing to pay on price. And so by buying today, they can always refinance. It's no longer the date the rate, marry the house situation anymore as much as it is just get into the market if you are on the sidelines, or go get a mortgage, or figure out how to go get a mortgage if you're going to go buy a house. So it remains to be seen where rates are going to be, but it still begs to ask, when will the buyers really begin to come in full force? As Logan Motoshami says, a savagely unhealthy housing market. So that looks like it still could happen further as rates begin to drop and inventory and demand grows.
Yeah, it's important to point out there are buyers, right? It's the sellers that aren't selling to make it for the inventory. But does that buyer's market change? What did you think of, and I'll play it right here. Mm-hmm. This is Grant Cardone.
The bank created that product to sell money. You can't just loan people money. You need a product in between. The bank can't lend money for just money. Like, you need a reason to borrow money. Oh, you're starting a business. That's a reason, but it's really risky for the bank. Everybody should have a home, right? We should call it something like, can't just call it a house, right? Everyone should have one. And then what they did was basically those homes were built for banks, because who made all the money on the homes? Wasn't even the builder. Certainly wasn't the homeowner. It was always the banks.
So what he's saying is, and this got a lot of press this week, he's saying people should, if they're going to buy homes, buy them as investment properties. Never buy it as a primary residence. Mm-hmm. Always rent. And he has a lot of followers.
Yeah, that's, it's just like a lot of people, it's just an opinion. Dave Ramsey says that you need to put 20% down on every house and take out a 15-year mortgage, which is not going to happen in Southern California. For even if you have a $400,000 a year income, taking out a 15-year mortgage on a $3 million house is not going to happen. So it's just another opinion. And I think at the end of the day, when you talk about the average home buyer, depending upon the regional area that you live in, right? You're in Boston, I'm in San Diego. If you can afford to buy it, typically what I'm seeing, and I'm no longer in that residential space, but with a lot of my colleagues, I've been here in residential for 26 years. And my colleagues that I've spoken to, because I was commiserating them up until the early part of this year, is that you still have a lot of buyers with literally 6 and some instances 7-figure bank accounts still looking, and there's a lot of demand for that. My daughter's boss, who has a 7-figure income and was looking for a $4 million house, still was making multiple offers here in San Diego County and couldn't find a house for 6 months. We're talking about someone who could pay cash for a property, and he was just being stubborn with himself as far as the money was, the demand for the housing market here in San Diego for multi-million-dollar houses. And I think that's just true. If you're a wealthy person in any demographic, you're still going to have that type of demand. So, whether it's mortgage demand or real estate demand, there is still demand. And I don't see that slowing down, or at least not in my circle of influence of the people that I've seen, either at restaurants and bars or at the networking events that I go to. There's still a lot of demand. I don't see it slowing down.
I've been talking to a lot of executives, and I heard a new program, founder of a IMB, over 1,000 loan officers, really got out of that business a couple years ago, started his own startup, selling more to brokers. So he got to go to what he calls the Disneyland of mortgage, the facility at UWM, and came up with this model where they use that platform, not to give a free plug here, right? And the banks sponsoring really the salary around it. And therefore they're able to offer those rates without any margin built in. And so it got me thinking, if you're selling value, which is explaining this market right now and helping somebody get into a home and make the right decisions, and maybe even assist in showing the property now with buyer's agents, what's going to happen with them, who's going to be in charge of actually going around showing the properties, if a borrower doesn't want to pay for that. When you lock it, I think the speed at which you close these is going to be so important if you're predicting a volatile up and down rate, where as we get more into this generation that buys more homes, I think they are a little bit less loyal to the local person providing value. They've been taught it's okay to change for a better price. They go into stores, people that have built and have an income, in downtown Marblehead, Massachusetts, have a really nice shop, and they'll go in and they'll do the shopping, and then they'll leave with nothing and make all their orders on Amazon, right? And that poor shop owner still has to make a living competing with not even close to pricing, because you're paying for the convenience. And I think that goes with your plumbers these days, your mortgage companies. It's just something you're going to have to be aware of, that you have a certain amount of time to keep that loyalty before they start shopping, not to mention the techs.
I think that
the ability to follow people too.
Any small business owner is going to have to decide what is their blue ocean. So whether you're an IMB or you're selling widgets or having a restaurant, what is the blue ocean strategy that you want to create for yourself? And as you were talking about that, it just brought me back to thinking about what was at least my experience in working with Countrywide on the West Coast. I never worked with Countrywide. I'm just using them as an example. Countrywide Retail, just knowing a lot of people there. Their business model was much more profitable. Their P&Ls for the branch managers were much more profitable. They just worked on speed. They're fast and easy stated income product. It's like, hey, we're going to close a loan in 14 to 21 days. Or we're going to close a loan in 8 or 9 days, as long as we have title and escrow. Fulfillment was the big key, and operations was the big key. So I think when you have a monster like UWM that has the money and the capacity, not only for rate, and also for service. I say potential for service because I don't think they've mastered that just yet. I don't think anybody's mastered that in the current environment right now that I know of. And I think if you decide your blue ocean is going to be fulfillment, then that's going to be the real key. Nobody's really, in my opinion, there isn't one lender out there that I've seen yet that says, hey, you know what? Fulfillment is so awesome. We'll close it guaranteed, on a consistent basis. Sure, 1 off or 10 off or even 100 off, but not every single mortgage loan. So whatever, if your blue ocean is going to be priced, and you're just going to say, I'm only going to make $100 or $200 per telemarketed loan per LO, even if it's $1 million mortgage loan, and that's your profit center, so you can reduce your margins and overhead and so on and so forth. Hey, great, let that be your blue ocean. But if your blue ocean is, I'm going to do it on service, I'm going to be a little bit higher on price, and I'm going to charge you for it, then let that be your niche. I think when a company decides they're going to be either the price leader or whether they're going to be the service leader for their regional demographic, and that could be regional. For example, you could be 2 zip codes away and still be a different regional leader, right? San Diego has multiple zip codes, but you could be your own regional leader. And I could live in North County, San Diego, and not even know what's going on in South County, San Diego. And so I think that when you have that type of strategy, saying you're either going to be price or whether you're going to be service, when you make that decision and you stick to that decision, and you get known for that decision, meaning that price or service, that the riches are going to be in that niches. This is the defining point as rates begin to decline right now, which it's so tempting, right? Especially as rates drop, to be that price leader. But if you want to stay in business, you got to make a profit. So when you make that decision and you decide to do it, you stick to your guns and you get known for that, that eventually creates your profit margin. It's okay to be the price leader as long as you know that your margins are thin and your commissions to your originators and salespeople are also going to be thin.
Yeah, and I'll add to that, but I totally agree. I think people still want to see people, trust people. I mean, that's why they go into the store before they order on Amazon, right? So it's just preventing that. You just got to be aware technology is always one step behind you, right? In any profession. And just 2024 is a new year. So it's going to get one step faster.
Yeah, well, there's a reason why the MBA has their trade show at the Waldorf Astoria and not at Motel 6. It's about service and experience. So that's, we really got to look at that and really bear down on whether that. And if you're in business, which one are you? What is your experience like? Which is this holiday season? What is your experience like right now?
Speaking of holiday season, so our first guest we'll have up here is Tim Allen, and I was on LinkedIn. What he does is he is a Santa's helper. He works distributing toys at the Salvation Army, Toys for Tot toy shop. I once had the Salvation Army visit us at a Rotary meeting, and they are one of the companies that really doesn't I think they are one of the companies that proves the most amount of money of your donation goes back to the people that need it, which is very cool. And I'll let him tell the story, but it is a mix of a Mortgage Bankers Association in his area, as well as a great story of the Salvation Army, as well as a great story of being able to distribute over 22,000 toys into the hands of over 5,200 children. And he maybe even passes it this year. So, Tim, thanks for coming up here. We wanted to make this a holiday episode for our listeners here live, as well as our listeners on our podcast stations and YouTube channels. Thanks for hopping up here.
Great to see you, Tim. Your microphone's on mute, so go ahead and unmute yourself so that we'll be able to listen to what you have to say about the Salvation Army. Really excited about hearing what the...
Thank you, Michael. You can hear me now?
Absolutely. Yeah, welcome to the show. Love to hear about your story with the Salvation Army.
Well, thanks. I liked what you were talking about, the Blue Ocean stuff a little while. That's just so anybody doesn't understand that the Blue Ocean is when you're not worrying about competition because you're doing something different than everybody else. And the Red Ocean is when you're swimming with the sharks. So, but anyway, what happens with this thing that we have now with the Toys for Tots? I joined the local chapter of the MBA of Florida, the MBA of Southwest Florida, in 1992. The MBA of Florida has 7 chapters throughout the state, and ours is in Naples, Florida. And in that year, we joined forces with what was then East Naples Fire Department, which had probably the people in most need. And they did a toy drive, and we were just one of the earlier companies adopting to helping people get toys. And we get if our members bring in bicycles, we supply helmets for the kids, and we do a thing every year with it. And it's been going on now since 1992 till now, and it's grown every year. East Naples Fire Department joined forces with the Greater Naples Fire Department to make costs more effective. It became a lot bigger about 15 years ago. And then the Salvation Army joined forces with us because they had something going on too with Toys for Tots. And I guess last year we distributed 22,000 toys to 5,200 families. And this year it looks like we're going to, I don't know how many toys, it's going to be a lot more than that. And it'll be to over 7,500 families. So it's gotten to be a pretty big event. And, you know, different chapters of the NBA of Florida do different things. Tampa does a thing with the children's home up there. So does Miami. So different chapters do things, but this has been the event we consistently stay involved with since 1992. And like I said, a lot of our members, that's, you know, gives them another reason other than just going to all of our meetings. We do have a meeting every month. We have, you know, Doug Duncan and really a lot of good speakers that come speak at our local chapter because we have a state convention that has a lot of those people too. But this is one of the things that give us the most joy.
Is that all in the Naples area?
Yeah. This is Naples. Yeah, Naples, Fort Myers to Marco Island. But
Right,
Naples
Florida.
is the main area.
Right, Naples, Florida.
West
That's
coast of
amazing.
Florida.
What,
So the 7,500 families we help with the Salvation Army, and we're just one of many organizations that do it. But I think we're the longest is just in Collier County, where Naples and Marco Island is. And we have a Mockley too, a community that definitely needs help, and we certainly are there helping them.
how did you get?
As someone who's in the mortgage industry, and so you're interviewing a lot of people, you get a lot of data on where they are from a family perspective, the impact of credit scores, credit card debt, etc. In some of these worlds that I've donated my time to, I think, you know, there are perceptions of what somebody has to be that is struggling. And the reality is it's not always, you know, what these preconceived ideas of a struggling family are. What advantage do you think you have being so close to homes and families from a financial perspective?
Mike, that's interesting. So here's what happened many years ago now. We had people that aren't familiar with what we do with it coming, helping distribute toys, because it takes hundreds of us, right? Hundreds of volunteers. And somebody wrote an article that actually got in the paper saying how it really shocked them that they were taking toys out to this woman's car, and the car turned out to be a Mercedes SUV. And some reason our paper published that. I think it just got through because there was no checks. And a woman responded, you know, that her husband had left her, that she wished she didn't have the payments on that SUV because it was her credit that was used to do it, and that this event saved Christmas. The people that put this together with the Salvation Army now, but the same people have been organizing this for a long time, there's a qualification for people if they're getting food stamps or something like that, that kind of automatically qualifies them with their kids, but they have to apply and answer certain questions. But you never know what's happening to somebody, and you can't just judge by what their car is now. One of the things that I would recommend people in mortgage banking do, I do this at a place we call Grace Place here that's for the Hispanic community in our area. I do a pro bono with the Financial Planners Association here. But we do a program that's developed by the FDIC that anybody can get on, and it's financial literacy. And we teach people how to get a free credit report, how to understand their credit report, and tips on budgeting. I have a calculator that you can get free. It's called the Snowball calculator that helps them paying down credit. That's another thing, you know, that you can do as a lender and really take what you have in your trade and help people. And of course, we've gotten people qualified for FHA loans and community assistance and everything else out of those programs. But this is just clearly just a charity that our MBA is involved with, and many chapters, like I said, in Florida, do different things, usually for children. it just makes you feel good about being an association. And when you're attending meetings, you say, well, it's more than just being a mortgage person.
You give this gift of toys, right? This in once a year, but really the gift, you have a gift that keeps giving you when teaching about financial literacy.
Oh yeah, that course is great. And like I said, anybody can download the program from the FDIC. You don't have to be a bank person to do it, and you just find a community resource in your area that's typically somebody that's educating people about financial literacy, and they will welcome you to come in. So that's different than what we were talking about today with the children, but it is more closely related to what we do as our business too.
And we'll be sure to share that link in the comment section on our shows. I
will share that link, and I'll share the link to the snowball calculator, because I think probably you guys have heard of that before, but it's how to pay off credit by picking out either the largest debt you have, or typically if you pick the credit card with the highest interest, set a payment plan. And I've had people that wouldn't qualify for a mortgage because they had $40,000 worth of debt, and we're making about $100,000 between the two of them, and a year later have that debt paid off.
Oh yeah, Dave Ramsey talks about the debt snowball when he talks about his baby steps and baby step 2. Yeah, and I think that's it's so powerful because it's really so simple. And if you would just sit there and go, you know what, when you get overwhelmed, especially in any time of the year when you're overwhelmed financially, if you sit there and go, you know what, we're just going to do the biggest one first, and we're going to knock it down. And I think that it just feels better and better and better as they begin to trust that process. So that
Well, if you don't mind, I'll send you guys a whole calculator. It's free, and it's developed by some other company but the financial planners love it. Not that that's their clientele, but just the clientele's children can use it often, very often. But just you can also pick it by the highest interest rate, and it gets you to really look at what you're doing. And you don't change your payments schedule that much, but everybody I've used that program that really hopped on it used less debt, and so many of them were able to eventually buy a property.
It's a good opportunity for branding, because every time they're following that program, they are reminded of the person that introduced them, the person that came in front of them and taught them financial literacy, the one that probably would be there to answer the next question. If you can then automate some of that content that you're doing and get it out to these social networks, right? I think I was talking with a sales leader the other day, and she said it really is. I mean, she said I wasn't expecting it coming out of her mouth, but she said it's a Kardashian world for loan officers. They need to be able to get out there and be seen sort of as the celebrity of their, I guess you could say, blue ocean, right?
Right.
And a lot of the for years now, a lot of the managing is getting weaker around the sales perspective of it. But the good ones get it. They have a successful model. Refinance typically saves those bad models, but the refinances are not necessarily there. So the ability to sell is really being tested right now.
Yeah, I think both of you would agree that if we're lucky, we may see rates down to 5%, but that's not going to be a refinance boom. So if you're not branding yourself and you're not in the blue ocean where you stand out from everybody else, there's not going to be a lot of business available. It's purchase business, so you want to stand out with the real estate community so they know who you are too.
Yeah, and so her thought was, the problem is you have a lot of people that are customer service people becoming loan officers, and the structuring of the loans does not matter as much as now it's getting out there, meeting people, and presenting. So you just gave us an idea to present with, Tim. We're thankful for that. You gave us a great story about you, and your brand got noticed by me. So you give to others, and then you receive. And I think we have Russell.
Thank you, and I'll add that calculator to your link.
Yes, please.
Thank you. It. Russell, how are you doing today?
It's a Christmas miracle, but happy to join you guys.
Yeah, you've been trying to get up and down, and I've been talking with LinkedIn audio folks, and they're like, "What problems?" And I was like, "They pop up all over the place." We had another one here, and I saw you up and down. You were messaging me, very resilient, and I'm glad you were, because this is a good story to go off of the backs of Tim, aka Santa Claus of Southwest Florida, and you also participated with the Salvation Army, right, Russell? And that stood out to me on your news feed. And I said, I really wanted to hear. I always like hearing people's first experiences because sometimes you just need inertia to get going, right? Can you tell us what made you do it and what that experience was of, I guess you call it holding the bell, ringing the bell?
Sure, glad to, and thanks for the invite. My family and I, we volunteer in various forms and fashions at Christmas time and really throughout the year. And another thing that our family does is we watch, the Dallas Cowboys on Thanksgiving, which I'm sure everybody's a Dallas Cowboy fan on the call today, as we are. And America's team, right? And so, the Salvation Army is represented well on Thanksgiving by the Cowboys. And
well, they didn't I don't think they liked Ezekiel Elliott jumping into that Salvation Army box, right?
Yeah, I don't think that went over well. But hey.
But the point is, they brand it. I saw
it.
they send a message that this is important, and that is good. That is when you study celebrity branding, you see it on the Cowboys game at Thanksgiving, and then when you see it in front of the Stop and Shop when you go in, there's more of a legitimacy, more likely that that's where my dollar is going to go. They do a good job of making sure, and again, I have to stress, the amount of money per dollar that you give to the Salvation Army or donate goes farther.
Benefiting others, absolutely. Yeah. So, watching the Cowboy game, and then, of course, doing Christmas shopping, you see others doing it. And there was an opportunity that came about through the bank that I work at. And I thought, you know what? It's good to step out of your comfort zone from time to time. And certainly I did that. And you probably saw the jacket. That's not a jacket that I would normally wear, but it was fun. And through that hour, I think I was certainly blessed more than others around me. And afterwards, I was telling my family, it really made me think about things that we know on a day-to-day basis, and it helps you remind you of some things. And then I learned some things, like in the post. I think I alluded to that. It doesn't take much. A simple look into somebody's eyes, a smile, a hello, a Merry Christmas. It makes a difference this time of year. And there were several people I thought, what? It looks like this is the first communication that they've had with somebody today, and that's enlightening, or at least it was to me. Another thing that kind of came up is that this time of year is really difficult on people. I mean, it's a great time of the year, no doubt about it. But there are people that Tim alluded to it earlier. Going through difficult times. So, having said that, just showing a little bit of care and compassion, it doesn't cost us anything, but it pays huge dividends. And then another thing, and this is definitely what Tim alluded to, is you can't judge a book by its cover. I mean, some people that came up and gave a lot, you would think, are they giving everything that they literally have? I mean, and they did it with joy in their heart and willingness, and it was just so impressive. And I experienced something very similar to what Tim was describing, whereas, an older woman came up to me, very distinguished looking, with really a tear in her eye, saying, this year has been really difficult for my family, and we normally give, and I just can't give this year, but thank you for doing this. And it broke me. I mean, it was powerful. And the other thing, too, is in the world that we live in today, we can disagree in areas of politics and religion, but we can still love those people that we disagree with. Mm-hmm. And so, at the end of the day, I just felt like, it really impacted me, the hour of doing it. It's certainly given me benefit way beyond the hour. And it's better to give than receive. And that's what we did.
I think in this digital world, people still have empathy and do some amazing things with GoFundMe, etc. But what you both are saying to me is you get a little bit closer to the saying, walk a mile in someone else's shoes. That hour gives you a glimpse of a new world that's out there, helps you connect with it, and then helps you spread this word. And touch more hearts or be more powerful in that area. Now, what do you find, and what were you seeing, any impact on parents teaching their kids to put $1 in? How did you see, as we are in the business of passing generational wealth, did you get to see any generational empathy being taught by some great parents out there, or was an hour too small of a sample set?
No, great point, Michael. I didn't even put that in one of my points, but it's a very valid point. The number of parents and or grandparents giving money to the child and, coming up. And of course, I would bend down and I would give them the bell to let them ring, to kind of, put a memory in place with that. And the kids with the joy of actually being able to put something in the bucket, and giving them high fives, and there was a lot of that going on. And my hope, based off of what you're saying, your hope too, is that that's not a one-time event. It's just something that goes on and on.
I love that just to say that, Russell. I sent a text over to Michael. I said, where your treasure is, there your heart will be. And for some people, it's money. For some people, it's time. For some people, it's their emotions. And for some people, it's just, there's an abundance of a lot of attributes in our own humanity that we have. And whatever we decide our treasure is, because everybody has a different type of treasure in their heart, what I would say is, out of the abundance of the heart, the mouth speaks. And what you're doing right now, for both of you, Tim and Russell, is you're taking the actions, and now you're speaking about it out of the abundance of what you want to give back. And I am grateful and appreciative of what you guys are doing right now, because it's just an external reflection of where your heart and treasure is at the moment. And to give more of that is awesome. I don't want to say admirable, but I will want to say it is something it's definitely appreciated.
Well, and like I said earlier, I was certainly the beneficiary of a gift far greater than anybody else was. And if you have a second, I'd like to share another little thing that we do, but I don't know if we're up against the clock or not.
We're not up against the clock for warm stories. Please.
Yes, go ahead. Go ahead.
So, it's interesting. We stopped giving things as gifts in our family a while back, because, and if I asked you, both of you guys, like, what gift did you get last Christmas? You may or may not remember that gift. We were having a difficult time remembering the gifts. We're very fortunate, been blessed, and, have, virtually everything that we want and need. But, we were finding that we couldn't really remember what we were getting the year before. And so what we did is we started giving memories. We build memories. So it could be, a pub crawl with my son. It could be, going to a concert with my daughter. It could be various things, but we give memories, right? And so from that, we transitioned into no longer giving gifts to our family, but we would spend the money that we would do gifts for ourselves, and we started taking care of angels. And we made that a family event. My kids are 25 and 30 now. They're older, but still to this day, we have a family shopping day, and we go out and we buy as a family. We divide them up, and we make it almost like a competition, right? And so we go out there and we try to get all these gifts for these angels. And then a few days later, we will have a wrapping party where we eat and drink and celebrate and pray over the gifts and hoping that we make an impact. And so it's just a neat family event.
I'm getting goosebumps just thinking about that, because it's one thing to give, and but you accommodated your family and those around you with so much, right? You're enjoying your time. You're doing something to give. And then you're providing grace to those in the giving of the gifts by praying over that. And for a lot of people don't know, I as a believer and a Christian, the definition of grace is the distribution of Christ into the lives of other people. And so when you're giving grace to other people, and I'm grateful that you decided to say, hey, not only we're going to pray over this and give them grace in that gift. So the giving gifts to the angels. I mean, I'm again just grateful that you've been able to share this story, because I'm grateful that you do that, because I've done that before, but I didn't think about praying over that, and I'm encouraged that it's in addition to already my active church life, it's something I can add to my family and church life as well.
Well, I tell you, it's a huge gift for myself and for our family, and we hope that those who receive, feel as fortunate as getting as I know we do giving it. And I just encourage people to do whatever you can, because we are good humans inside, and we have the capacity and ability in various levels to be good humans to others. So,
and we're in a profession where we talk and are looked at for advice from many humans. So it's a chance to get out there. And I think this time of year is great to warm the heart, to do the actions, Russell, that you and Tim are doing, to give back, to put others first, and maybe those that need the help the most. And it sounds, that's an area where you guys have been able to target in many different ways. And if anybody in the audience has a story for the replay, don't just think about the people in the room now, but the replay, we would love to have you up to hear that warm, touching story this time of year, because we wanted to have this show. Hopefully it's a yearly show where stories come together from within the industry. Then next week on More Talk, which is Thursdays, 2 p.m. Eastern, 11 a.m. Pacific time on LinkedIn Audio. But we do the replays on our podcast channels, Google, YouTube, and coming to others. Next week will be, okay, we warmed the hearts. We took a time where maybe everybody doesn't answer the phone, to actually keep remaining active and thankful and grateful. And then next week is planning out if you haven't done it yet, making sure you have your plan, your goals, your visions for 2024, and what that will look like, and maybe some predictions we could even do next week. So thank you again, Russell. Appreciate you coming on and telling this story. And thank you, Tim, as well. We're going to shift to we'll have another story coming up here from Bettina, who's a frequent listener. So we appreciate you coming up here.
Yeah.
In fact, before we switch to Thomas, why don't we just grab you up here and hear your quick story?
Now?
Yes, go.
Okay. Hi, Merry Christmas, everybody.
Merry Christmas, Happy New Year, Happy Holidays.
Yes, Happy Holidays. Well, as you were speaking about gifts, and I agree with you also, the gift of grace is so important. I was thinking of giving our time. I have many times found that sometimes you're going to do a sales call, or you're going to go see somebody, and you end up visiting for a totally different reason. You're going for business or whatever, and you end up sitting with the person, especially the elderly, and giving your time. And sometimes they need somebody to listen to them, or sometimes especially in our business, that people are making life decisions. I've had a couple of incidents lately where I went in actually for a sales call, and I ended up giving them a total life chiropractor adjustment. You know what I mean? And I can give you an example of that. Somebody who's selling 2 properties in order to buy the new one. And they keep telling me about how stressful it was to find a new property, the environment we're in, how difficult. And I was able to say, and they were very concerned about selling the 2 properties that they own free and clear. But I ended up having lunch and sitting down and looking at the entire picture. And after a while, I said to them, well, I think it's so much more important that you take the time to feel comfortable about where you're going to end up. Because you keep telling me about how stressful you are and you can't make up your mind, but you want to sell these 2 properties here. And why don't you take the time to make sure of where you're going to end up, where your next property is almost more important than the 2 that you're leaving behind, because a little more money, a little less money for properties that are paid off are not going to be as important as you finding a permanent home where you're going. And as a result of that, a lot of fruits came out of that because it was in my neighborhood and we became friends. But the bottom line is sometimes you come in for something, and if you sit down and you have a heart to help people, you end up making a difference by giving your time. And we're so quick to dismiss quickly, move on to the next business deal, that sometimes we overlook that.
Yeah, you're
Yeah, I
right.
think, especially with the elderly, it can get lonely, right? This time of year. So I think as you maybe plan out your 2024, you remember that every December things do slow down. The first week of December is the largest listing week, and then after that, it really drops. Especially the last two, like no new houses on the market. Put in some time, like Bettina's saying, maybe to take some extra time. Maybe look through your database, look through your family, look through people active in your community, look through wherever you're volunteering your time, and find somebody that's just looking for an ear. And it's okay, to slow down and listen. And I think that goes back to the community involvement and just being aware. I think earlier, the story that both Russell and Tim were saying with the Salvation Army. Russell said in his post, don't be quick to judge people by, the cover of the book. And Tim said it with the Mercedes that pulled up, and what a crunch they were having in their life. There are people out there that need help. And if you can take the time and don't be quick to judge and take the time and go out and this holiday season or next holiday season, be there, be present. I think that's one of the bigger talking points that I've been able to get out of this in the community that we have, a great community of mortgage and real estate agents, because they are so active in people's lives and in homes and shelter. Anything, if there's any other stories, please jump up here. We would love to hear it. Thank you, Bettina. We appreciate it.
Yeah, and one more thing I'd like to tell you. Sometimes, at least from my perspective, it's inconvenient. You don't take the time purposely. Sometimes it's inconvenient, and you end up listening to something they say where almost it's like your spirit or your heart turns on, and you're like, well, it's inconvenient. I have another meeting, but I'm gonna take the time. So it's not always like we have the time to go in and look at everybody that might need, you know what I mean, some of our time. I believe that it could happen anywhere, and a lot of times it's inconvenient, and that's the clue. After a while, you realize that's the clue. It's inconvenient, but you're willing to give it your time. So it's not always a gift that we have abundantly to give. It's sometimes it's absolutely inconvenient, and I'd like to point that out if it happens to anybody. Understand that too.
Yeah, sometimes, not all the time. Sometimes inconvenient is a form of accountability for what we've received as gifts. So I totally agree with what you're saying, and it's just really what is it that we are willing to provide based upon the gifts that we are given. So
Exactly.
Thanks, Bettina. Yeah, thank you for sharing that.
Thank you. And I invited Thomas up here. He is the face of the Mortgage Collaborative and has many members across the country that use that, the co-op, I should say the Mortgage Cooperative, to get advice, right, to get better. I mean, I don't want to give it a commercialization, but you can use the numbers to be able to get better investors.
I'm not going to stop you, Michael.
Yeah, it's also, I mean, a little bit of a segue. It gives you an ear to talk to in difficult times. Make sure you're aligned properly, and in good times, make sure that you have the best business practices. And in order to get the voice out there and a lesson in branding and broadcasting, they came up with a concept called the 12 days of Christmas, or the 12 days of December, maybe. But there's 12 days of whatever it was. I associate it with each day. You get a successful leader in the industry giving a reason why they are successful, and some tidbit on an edge you may have have going into that next year, or something to be thankful for the year before. It is a variety, so I don't think I can just do it justice trying to explain it in a couple sentences, because each person's different, each story's different. The bottom line is it gives you a way to judge December. Like, it comes every December. It's been, and so I asked Thomas to come on and maybe just give a quick background, how it came about, and then how it was able to get momentum enough to keep happening year after year, because we talk about consistency, and you guys have been great on that consistency, and that's not an easy thing to do.
No, well, Michael, I really appreciate it. I appreciate you and Mike having me in, and was just really enjoying the inspiring stories that Tim and Russell had to share, and really agree with Bettina's feedback as well. And it's just kind of relating it more to, your client base or people in the community. But I try to even create that openness with my team or my clients as well, where time allows. We spend so much time focusing on the next task or next business objective. It's easy to get, to forget that, we're dealing with people and great people and great relationships. And sometimes it's just good to kind of have open forum and take a pulse of how things are going in their world. And I think, to Bettina's point, you find out a lot about the people you care about or that are in your network. And they greatly appreciate the time you're willing to dedicate to them, when it's not just around maybe the business at hand. So I appreciate you guys kind of creating this format to share. But yeah, 12 days of TMC. So we just wrapped up the fourth annual edition now, and give you kind of the origin story. And so for those not familiar, Mortgage Collaborative, we put on a virtual year-end conference that typically spans a couple days coming out of the Thanksgiving holiday, and runs 12 consecutive business days through the first couple weeks in December. And, we know we can't monopolize people's days, but we try to create a recurring format each afternoon of about 2 to 3 hours worth of content, usually from like 2 to 4:30 Eastern, where we kick it off with, maybe a inspiring leader or speaker that could be inside the industry or outside of it. This go around, we had some really compelling industry movers and shakers, including FHA's Julia Gordon. We had former HUD Secretary Ben Carson come in. We had Brittany Hodak from Creating Superfans, used to be at experience.com. So we try to kind of shake it up a little bit with the keynote for 30 minutes, kind of set the tone for the day's discussion, and then follow it up with some really compelling breakout sessions based on the feedback of our lender members and what's really present or challenging within their businesses, as we put a bow on the current year and look forward to the year upcoming. So, how it all began, and I got to say, the shout out to our team too. This 23 edition was our largest attended, where we had over 3,500 registrants from within the collaborative network too. And the lenders get such value out of it, because usually only their C-suite executives or executive management have the opportunity to come and attend the collaborative conferences in person. So the gift of 12 days is being able to open up the registration for it to their entire organization. So getting down to their originators, their ops teams, who may not have a lot of industry-wide exposure to a lot of these conversations and content. So they tend to get a ton of value out of it, which is awesome to give back to our network this time of year. But
that is great. I'm on the board of the Massachusetts Mortgage Bankers Association, and it's figuring out how you have a lot of sponsorship at the enterprise level, but you're trying to get more participation from the employees. So it sounds like, the people that go to the conferences, I've seen Julia Gordon, she's assistant secretary, or HUD, right? But she's actually, her role is commissioner. So she says, you can call her Commissioner Gordon. I always love when names work out like that. So Commissioner
Yeah,
Gordon.
she's good about dropping the Batman reference from the conditioner, Gordon.
So I didn't mean to interrupt you. You're going to tell us
Not at all.
how did it start? Because it is a
Yeah.
fascinating story.
Absolutely. So, not too long ago, COVID happened in March of 2020. And if you recall back to that first month, almost overnight, we're all scrambling in real time to kind of figure out how we operate our businesses and in the mortgage industry specifically. How do you originate or close a loan in a compliant fashion in a fully remote setting? And it was unbelievable how much all the organizations within our membership, in very different ways, were scrambling for just updates or any sort of guidance in real time that could help inform them just on how they operated day to day, from things of, how do I, set my staff up from a fully in office setting to getting them set up remote and getting comfortable with it, in the next week or overnight. And we just instantly kind of put the pause button on a lot of existing initiatives we we're working on, because it just became clear there was a pressing need, not only within our membership, but just in the industry as a whole, to understand, how do you navigate this new normal? And so we instantly made the call to dedicate our efforts towards putting together multiple daily webinars on every topic under the sun that was coming back from us from our lender members as to, do you guys have insight on how we go about this process in this new COVID world? And so probably from March to at least through May of 2020, we were doing anywhere from like 8 to 12 webinars each week, sometimes one on top of each other, just to try to dive into these different topics, or bring back updates from within the network once you're able to kind of validate some findings and share that out with our members at TMC. And so as the year progressed, it became apparent that we weren't going back to in-person conferences, at least anytime soon. So we decided to dedicate kind of a traditionally slow time of year, being that of December, and try to give a gift back to the mortgage industry and our network for, what a unique year 2020 was, and put this original 12 days format into play, to give back to the industry. And our president and COO at the time, Rich Rabinski, who most people wouldn't think it on the surface for those who know him, but is absolutely obsessed with Christmas, and is the one that came up with the 12 days format as a fun way to kind of pull together these multi-weeks of content that we were going to provide out to our network. And then have some fun, playful holiday themes to it as well. Everybody leading sessions kind of coming on in ugly sweaters, or a fully decked out virtual office background and holiday attire, even pumping in some holiday music to kick off sessions, just to kind of lighten the mood a little bit as we dove into, some really challenging topics in the industry.
So, we're almost here at the top of the hour. We'll try and get a link from you to put in the notes so people can see, or at least find where that could be, or how to join to get it.
Happy to share.
Can you give us an example of some good news here in the, right around Christmas time, some good news here for the mortgage industry? Any predictions on how we're going to get more, maybe inventory to the market? Any big winners? Anything, if somebody came to me and said, take Grimes the Gray Ghost on the 230 Post, right? Like, do you have anything that they said bet on behind those closed doors of the 12 days?
Well, I give you two things real quick. One, we did an economic and market update and outlook session, and brought in economists from RHMI and Fannie Mae, and their consensus was, revising their predictions as we spoke, just because of the updates in the rate market, and believing that we're going to get back to a 5 handle before the fourth quarter of 2024. So that was some uplifting content. And then from the inventory standpoint, Mike, you'll appreciate this. We participated together in FHFA's tech sprint this summertime. So we had a new wrinkle for this year's 12 days. did our own industry solution sprint to bring our partners and members together to come up with some unique solutions, and one of which was trying to tackle the inventory crisis. And there was a really cool solution that was generated from it of kind of creating like a app or dashboard platform where builders essentially could bid on blighted properties out there and have access to grant funding and different things like that to reduce the cost to renew and renovate as a unique way to take some existing property, revamp it, and be able to push it back out into the marketplace, particularly for first-time homebuyer segments. So kind of sharing that with industry stakeholders and seeing if there's something that could be driven from it.
That's a tall order. Taking blighted property. There's blighted properties all around the United States. So that it's not just a regional in like Detroit or Cleveland. It's nationwide. So that's not only is it noble, it's fascinating that we could do that. I have one question. Out of all the speakers that you had for 12 days of the Mortgage Collaborative, could you pick one or two that you found super insightful that we could watch either a replay or you would recommend that you somehow get a chance to listen to it?
Yeah, absolutely. I thought, former Secretary of HUD, Ben Carson's speech was really unique just in kind of what he's doing in his post-housing life and, kind of staying dedicated to being involved in creating opportunities in housing going forward. So I'd be happy to shoot the link to that conversation back to you guys. And then a member of ours, Jesse Lopez with Mortgage Solutions Financial out of Colorado. He's got a great blog if you follow him on LinkedIn. It's called The Ascent, and it's really about leadership with using emotional intelligence and empathy out there. And he led a great session around guiding managers towards leading with empathy and coaching our teams up and how they're navigating trying to accomplish business, personal, organizational goals through let's be honest, a really challenging market for mortgage lending.
Oh my goodness. Yeah. I haven't had a chance. I'm glad you said that you'd be willing to share those links because I was actually looking for them, and I'm pretty smart, but I was lame enough to not be able to find them. So thank you.
Well, we've kept most of the content guarded for our members as a benefit of the membership too, but we did have a couple of unique sessions that we had shared more globally just to create access for the industry to what we're doing here at TMC. So happy to share those with you guys.
Appreciate that. Thank you, Michael.
No, that was a great question. I want to check out, especially, I like Ben Carson a lot, so I'll see what he has to say, but the mortgage solutions, the empathy, the management, that's all going to be very important. Appreciate all of the guests jumping on today. It was a really uplifting show. I'm really glad we did this model. Next week, if any of our listeners, any of our speakers, anybody, we're going to be talking about predictions for 2024. We're going to be talking about a specific Housing Wire article that makes a lot of predictions. So we'll go through and talk about that. And also we'll see if Mike can make his own kind of insight on where he sees rates go and maybe talk about top story of 2023 that we each have from the show.
Yeah, we should do that. We've been doing this consistently every single week, Mike, and to consider how many people start something and let it fizzle off after 2, 3, 4 episodes, and here we are, 6 months later. It's just, the fact that we've stayed consistent doing this every Thursday has been, even throughout the trade shows, right? Throughout the MBA shows or the IMN shows or the CMBA shows and New England. Just the fact that we've been able to have this show even throughout all the conferences. We've been able to stay consistent. We want to truly be servants to our industry for sure.
That's for sure. We're proud of it. We always talk about consistency. Next Thursday, 2 p.m. live on LinkedIn. The replay's 11 a.m. I'm sorry, live 2 p.m. Eastern, 11 a.m. Pacific. The replay is on YouTube. You'll see a lot of preview clips from my LinkedIn feed taking you over there. There'll be a replay of this episode to share with others. Thank you, everybody, for joining. We look forward to seeing you next week. This is More Talk.